All right, Ken Orange Theory Trader back with you with another video talking about the part two specialist series, how to trade euro yen and pound yen. So the premise of this notion is that if you focus on one to two pairs, really two pairs or more possibly, with the same quote, which is the second currency in the pair. So in this case, it's going to be yen with euro yen and pound yen. Okay, if you study their behavior and their movements, it can be an effective tool for trading success. Now, let me be clear though, I'm not suggesting that both pairs will move the exact same 100% of the time. That's just not the case. Sometimes they do, but other times they don't. So I don't want you thinking that just because one rises, the other is supposed to rise as well at the same time. That's just not reality. Sometimes they do, sometimes they don't. Now, in terms of the setups that I trade, of course, candle range theory. I look for trading opportunities at 1 a.m. candle threes, 9 a.m. candle threes, daily long candles and daily short candles, candle three. But it's all candle three. That's all I trade. I don't trade candle one and definitely not candle two. So since we're trading euro, yen, and pound yen, there is a cheat code that you can use by looking, not trading, but just looking at euro pound to see which one is stronger. Okay. So we're not trading euro pound, but you can see which one of you stronger. So this is just keeping it very simple. Okay. If you check euro pound and you're bullish on the yens, all right? If euro pound is rising, you want to buy euro pound, just like it says there. And if you're bearish, you want to sell euro pound. If euro pound is falling and you're bullish, then you buy euro pound or you sell euro pound. So really what you're looking for though is just to see which of the two is stronger. So you might figure, or you might wonder, okay, well, how do I know what the trend is? How can I figure that out? I'm going to give you the simple sauce is 50 EMA, 200 EMA. All right. If the 50 is above the 200 and price is also above both of them, then that means that euro likely is the stronger out of EJ and GJ. Typically, euro is more likely to just rise faster and further. If price is below the 50 and the 200 EMA, that means that pound is more likely to rise faster and go farther. Okay. Pound is stronger in that case. Okay. So, like I said, to determine the trend, you can just use a 5200. And if it's above those EMAs, euro is stronger. If it's below them, then pound is stronger. Just keeping it simple. If you want to pick a different trend indicator, that's fine too. But again, this is not required. You don't have to study, euro pound. All right, so let's take a look at 1 week in review, which is December 8th through the 12th. Here's a courtesy look at euro pound just to show us what the day was, what the week was looking like. This is a daily chart. So on the euro pound, you see here, this is Monday, Tuesday, Wednesday, Thursday, and Friday for the week that we're about to look at. Okay, so again, we're not trading this. We're looking to say, okay, which one is stronger, euro or pound? Now we have the 50, which is this blue line, which is above the 200. So that means that overall the trend is up or bullish. But notice how the price is below the 200. So when price is below, I'm sorry, not below the 200, but below the 50. So when price is below the 50 but above the 200 is either neutral, which means it can go either way, or chop, or it's still bullish euro. But it's definitely not showing that the pound is stronger. No. Okay. So if you had to pick something because of how it's structured and where it is, the euro is the better bet to go farther and faster than the pound in this case, based on what euro pound is doing. Okay. So that's just one thing you can do. So let's look at EJ on the daily chart. Okay. I did have to include a couple days prior to because Thursday and Friday of the prior week. Okay. This red candle and this green. Um, did set up candle one and two of a candle range theory, which started Monday, but we're looking at Monday, Tuesday, Wednesday, Thursday, and Friday right here. Okay, so this was the candle range theory right here. Okay, so what we're looking at is the trading opportunity that played out on Monday, this candle right here, this green candle. So if I drop down to the 5-minute chart and I start trading at 1 a.m., this yellow box here is the first hour of the 1 a.m. 8-hour chart. You just look for the best entry, which it can either be off of a change of state of delivery, or sometimes you can use a fair value gap. In this case, a fair value gap would have sufficed. So it gave plenty of opportunity, but I did an entry to a pin to a fair value gap right here at 2:40 a.m. And if you would have gotten in right here, that would have been a 40 pip rise through the end of the day. Or if you held overnight, or it would have been here and also this candle right here, this next day. So this was Monday. If you held to through Tuesday, you could have got about 150, 160 pips between day one and day two. Okay, so this is candle one, two, three. Price broke out of the range, so it's safe to assume that you could get a continuation. And another confirmation of that is the fact that when we looked at euro pound, euro was the stronger of the two. So the expectation going into the week is that euro is probably going to rise, okay, more than the pound will. All right, so that's that. That's how that works out. Now let's look at the 8 hour chart as well to see what opportunities were afforded to us. And I mean, there really weren't any. I'm going to be honest with you. I didn't. It was just a trending market. And here's the thing: if price is just steadily moving, I know you had some consolidation here. You could have tried to figure that out, but that's just really choppy price action. That's not ideal. Okay. It was just a trending market. Candle range theory. Once one happens and it breaks out of the range, it can keep going. Like you're not guaranteed a candle range theory setup every single week. So in this case, I just didn't see one that was really worth breaking down. You had some possibilities here, but I was just like, no thanks. Okay, this was really the best move. After this type of move right here on Monday, I mean, what else do you really need? 100 pips in a week is awesome. Okay, 150 pips in a week is really awesome. All right. So now let's look at GJ. So same thing actually. You had Monday, Tuesday of the prior week, which did give candle 1 and candle 2. So we're starting on Monday, which is candle 3. So we start trading at 1 a.m. On the 5 minute chart. Here's how that looked. The best entry would have been on a entry right here at 2:30 a.m. and did give a 77 pip rise for this day. And if you would have held, I didn't do the calculation on this to see what it would have been if you would have held for the next day as well. But as you can see, it was considerable. This right here would have been more than enough between 1, 2, the breakout of the range. I mean, all that could have been yours. I mean, what else really do you really need at that point? But I do like to go over the 8 hour chart as well. So here's GJ for the 8 hour chart. And this one actually did give a trading setup that I thought was legitimate on Friday. It gave a 1, 5, 9 a.m. setup. So we'll take a look at that. This one also here was kind of valid, but this red candle right here is 5 p.m. and I try not to be in the market. I don't hold anything overnight. I just don't. So I wouldn't have taken that this CRT. I'm not in. Okay. But this one here was more valid. Candle 2 created the high of the day on Friday and then straight drop. So let's look at the 5 minute chart. And the entry would have been at 9:10. You could have entered off of a change state of delivery where the candle high was broken and closed below for this one candle at 9. So we enter there. Stop loss goes above the high. And this was a 64 pip drop outside of the range before price did decide to retrace. Okay, back up to the daily open, and that's where price ended. So it really didn't move all that much by the time the candle was done. So you have to know when to get out. Okay, when to get in and when to get out. But you could have got another 64 pips. So at a glance, here's how the week would have looked. If you were trading EJ, Monday would have been it. You could have just held it all week. One entry, you could have held it and just had 150 to 200 pips. For GJ, you could have had a entry as well in the 1 a.m. hour. You could have held long and then took one short at 9 a.m. on the 8 hour chart. But you only really had two trading opportunities for GJ and one ideal one for EJ. So there is one more that I did just notice. Not my favorite setup, but I will go over it real quick just to show you on the daily for EJ. And it is a 2 candle range theory. You can say a breakout. This would be considered the low. This is the daily chart. This will be the low. This will be considered the high. So Friday, you did have a little price action to the upside for this day. This again, daily chart. So let's take a look because we hope that this daily chart is made up of at least two green candles, but let's take a look on the 8 hour. Hopefully it loads up. Okay, so yeah, we got a couple. So let's see. We don't trade. I don't trade again. I don't trade 5 a.m., 5 p.m. rather. But I do use, if it's a big one like this, what I like to do is draw a fib and try to get in on a retrace. So if price goes 50% to this level here, I try to get in. So I'm going to go down to the 1 a.m. template, see what we would have gotten on that when it retraced to the purple, which was right here. Okay, that's right there. And let's see if we can find the low of the candle. Okay, the low of the 1 a.m. candle around the 50% was this red candle right here. Price closed above it about right here. So a good entry would have been at 3 a.m. And let's see here. Let me see if we could have got how many pips we may have gotten from that. Let me see if it would have given like 50 or so. I'm really not sure. Maybe about 40 before it came back. Yeah, you definitely could have got 40 by 10. When you take trades early in the day, typically by what I found is by 10, 10:30, you want to be out. So that's what would have happened there. You would have got in at about 3 o'clock, and you could have got at least 1 to 4 if you had a 10 pip stop loss by 10:40 a.m. That would have been good there. So that's it. So, that's the EJ and GJ and also the Euro Pound just for a possible trend confirmation. You can use that to help you determine your bias for the week to see which one of those pairs is the stronger of the two. But again, it is not necessary to use EJ if you do not want to. So I appreciate your time and attention. I hope that does help. You can be a specialist and just trade, for a pair. If you just want to focus on one pair for a week or one cross, EJ GJ would be a great pair to watch. Great two pairs, and check out part one of the specialty or the specialist series where I did go over Euro New Zealand and Pound New Zealand as well to check that out. But I appreciate your time and attention. This is part two, and I'll see which set of two pairs was going to be next. Again, thanks for watching. Have a great rest of your day. Take care.